how do I decide, should I be in a mutual fund at all or not?
If you're looking out particularly in the realm of equity and debt for steady returns, and you're willing to take principal risk, then to me, mutual fund are possibly the most effective solution because they are arguably the most regulated product, they are arguably the cheapest product, and they have the highest disclosure standards in this country. Once you have decided, because as a retail investor, the fund gives you the benefit of diversification by participating in a large pool of assets. If you have 50,000 rupees, you can possibly on your own build a portfolio of 3, 4, 5 stocks. But if you have 50,000 rupees, you can go and buy a mutual fund which has a portfolio of 30, 40 stocks. So you've got diversification in a minute. Once you satisfy yourself that equity mutual fund is a better bet than buying specific stocks, then I would go top down. First, I would look at lineage at the fund house. Satisfy myself that this fund, the brand gives me trust and confidence that they would have above board practices, that they are very fair to investors, that they have a terrific track record of performance. So I would go first with lineage, and then I would look at individual products in their portfolio, in their briefcase, and see which product suits me most. Depending on the size of investment, I would say pick the number of funds. It is important to know that picking too few or too many are both bad for the investor. There is an optimum number, which there is no mathematical formula, but it's a question of comfort. For example, if you have a lakh of rupees to invest, I would say that you should buy between 3 and 4 funds. If you buy 1 or 2, there is the risk that if that one fund doesn't perform, your entire portfolio gets affected. But if you have a lakh of rupees and you go and put it in 15 mutual funds, then even if 2 of them do very well, it will never show on the total. So there is an optimum number that you have, which I would say is somewhere in between. And that's about 3 to 4 funds is what you should be looking at, whether it's equity or debt.
Thank you very much, Mr. Vaidyanathan, for joining us today. Well, that was our lesson on investor protection and disclosures when you invest in mutual funds. But before we go, let's take a quick look at the lessons learned today.